Bull's power and bear's power are indicators that measure the strength of bulls or bears in the market. Bear's power gives a signal to open a long position when it's below the zero line. The bars are increasing, approaching the zero threshold. A short position can be opened if bull's power is above the zero line. The bars are decreasing, approaching zero. You can also consider other signals. Bull's power generates a buy signal when its bars are growing. On the contrary, a sell signal appears when the bull power's bar are declining. The zero value of the indicators point to balance and market forces, in which the price is balanced between sellers and buyers' interest. If bull's power goes up, it indicates that demand exceeds supply and the price increases. If bear's powers go down, it indicates that supply exceeds demand and the price decreases. Both indicators are used to confirm the signal of trend indicators. They do not work in flat market conditions. The Elder index is called the Bull-Bear Power Indicator. It reflects the behavior of buyers and sellers in the market during a certain period of time. If the indicator hovers near the zero line, where is balance in the market, neither party prevails. Demand is balanced with supply, and the price does not change. If the indicator value goes above or below the zero line, it shows that one market force dominates the other. When developing the indicator, Dr. Alexander Elder was guided by several assumptions. Based on these assumptions, Dr. Alexander Elder developed Bull's power as difference between the maximum price and the exponential moving average to confirm the trend. The Bull-Bear Power Indicator is used as oscillator in a combination with other signals generated by trend indicators. On the trading platform Index Bull-Bear Power are two different indicators. They are histograms, which are built relative to the middle zero horizontal line. Both histograms are located below the price chart. On the Line Finance trading platform, Bear's power is denoted by BY. Bull's power is denoted by BU. In the settings of the exponential moving average, the default period is 13. You can always change it. The smaller the period, the sharper and faster the indicators will react to the price changes. At the same time, more false signals can be generated. The EMA period is selected individually for each time frame, asset and volatility in the strategy tester. In the settings, you can also specify the type of price used in calculation formula and the type of MA. There are 8 price variants, 4 main open high low close prices and 4 additional ones. In addition to the EMA, you can use a simple moving average as well as linearly weighted and smoothed moving averages. Bullish and bearish power indicator signals. Buy signal. The bear's power indicator is below the zero line. The bars are constantly decreasing towards the zero line. The bull's power indicator is above the zero line and increasing. The bars are consistently rising. Sell signal. The bear's power indicator is below the zero line. The bars are consistently declining, moving away from the zero line. The bull's power indicator is above the zero line, declining from the maximum values. The bars are consistently decreasing towards the zero horizontal line. The signals can be easily interpreted if buyer's power grows. The seller's power should fall accordingly. In this case, bull's power goes to its maximus, and bear's power on the contrary tends to the zero line. The opposite is true for selling. Bear's power will go low in the negative zone. Bull's power will move to the zero line. Trend trading. One of the popular classic forex strategies is trading using moving averages. This strategy is discussed in general terms in many sources, but it has nuances. The essence of the strategy is as follows. If a price crosses a moving average from below and the trend indicator is directed upwards, it's an uptrend signal. If a price crosses MA from above and the trend indicator is moving downwards, it's a signal of a downward trend. Oscillator confirms the signal. Channel trading. Instead of analyzing the history of codes, let's examine a real-life example. On the evening of June 26, 2024, here is how the Euro-USD currency pair on the 1-hour time frame looked like. In addition to the bull and bear power indicators, the Bollinger Bands channel indicator with default settings was added to the chart. The strategy implies capturing the moment of channel narrowing after its expansion. The widening channel indicates the growth of the amplitude of the price movement in relation of the median. When the price has moved far away from the median, we should wait for a trend reversal. However, channel trading alone involves a high degree of risk as the price can break through the channel boundaries. Therefore, it requires a confirming signal generated by an oscillator. The following signals can be used on the chart after the formation of a white channel. The price starts returning to the middle of the channel. Two green candlesticks appear rebounding from the bigger channel border. After hitting its extremum in the negative zone, the bear power indicator is gradually returning to the zero line. Both signals indicate that the strength of the sellers is weakening and a long position can be opened. I opened a trade on the second green candlestick, blue arrow. The first target is located in the middle of the channel, the first blue line. Here you can close half of the position and protect the remaining 50% with a trailing stop order or place a take profit order at this level. You can determine a stop loss trailing stop levels depending on your risk management. The second target is at the channel opposite boundaries. I kept my trade open for a few hours. The position was opened at around 6 p.m. on June 26. After a while, I checked the chart at 8 a.m. on the June 27. In addition to the fact that the bear power indicators continued moving close to the zero line, an upward movement of the bull power indicator in the positive zone confirmed the received signal. Therefore, the signal was profitable. The trade with a minimum volume of 0.001 lot brought almost $1 or about 15 pips of profits, including the swap and spread. In 24 hours, the trade generated more than 2.5 USD in a strong uptrend. The arrow indicates the candlestick where the trade was opened. Trade on divergence. Divergence is defined as a case when the price of an asset is moving in the opposite direction of a technical indicator, such as an oscillator. It can be determined by several price extremes. For example, the following condition must be met for a short position. The bull power indicator is above the zero line. The bars are gradually declining, forming at least two extremes. The second extreme must be below the first one. The price is increasing. The second extreme is above the first one. The very fact of the first condition indicates that the strength of buyer is fading and the price may fall. If the price continues to rise due to the momentum in the market, it's a divergence, reinforcing signal confirming the imminent reversal to the downside. Bull's power and bear's power indicators are two different indicators used to confirm a trend. Bull's power measures the quantitative advantage of buyers and their trading volume. Bear's power gauges the strength of the sellers. The indicators' histograms are placed below the price chart. I hope you like this video. Subscribe and please like this video. Goodbye.